Let's talk about the real estate market in 2026. The year started off looking pretty good, but then spring arrived, and a sudden chill just completely froze all that optimism. We're going to break down what happened, why it happened, and what it might mean for the months ahead.
For anyone in real estate, this feeling is getting all too familiar. For the third year in a row, the spring season, which is usually this great optimistic time, has been totally rocked by some unexpected market-altering event.
So what was it this time? What could possibly be powerful enough to just slam the brakes on the industry's hopes for the entire year? Let's find out.
To really get what happened, we have to look at one single dramatic event back in March that sent ripples across the whole global economy.
And boom, here it is. A war in Iran led to the closure of the Strait of Hormuz. Now, that's a critical choke point for global trade. The immediate result? Oil prices shot through the roof. That stoked all these inflation fears, which, you guessed it, pushed mortgage rates up and completely shattered the market's positive outlook.
But here's the thing. This wasn't some isolated incident. It's actually just the latest chapter in what's become a really frustrating pattern of springtime disruptions.
Just look at this. In March of 2024, it was that bombshell legal settlement that basically rewrote the industry's rules. Then, March 2025 comes along, and its new import taxes creating all this economic uncertainty. And now, March 2026, the war in Iran. It's this uncanny and frankly disruptive three-peat.
Okay, so that's the big picture. But how did this latest shock actually feel to the people on the ground, the agents? To figure that out, let's dig into the data.
We're going to look at the Intel Client Pipeline Tracker. Now, this is basically a composite score from a survey of agents, and it tracks how they're feeling about their business, both right now and in the future. Think of it like a mood ring for the entire industry.
And wow, this chart really says it all, doesn't it? In early 2026, sentiment was moderately optimistic. Agents were feeling good. But by late March, right after the news from Iran, that sentiment just plummeted into cautious territory. I mean, that is a clear and really significant shift.
And if we break it down even further, this is where it gets really telling. The tracker has 4 parts. Notice how the scores for their current business pipelines only saw a slight change, but their future expectations for both buyers and sellers, those shifted dramatically from optimistic all the way down to cautious. So the real story here isn't about today, it's about the fear for tomorrow.
And that brings us to the most telling part of this entire analysis, that huge difference between what's happening right now and what agents fear is going to happen next.
This is the crucial point right here. All that pessimism we're seeing, it's not being driven by a mass exodus of clients today. It's being fueled by anxiety and uncertainty about what's coming down the pike. It's a story all about future risk.
I mean, just look at this comparison. On the left, we see their present-day client pools. It only ticked down slightly. For the most part, business is stable. But on the right, their future expectations, they dropped a lot. That's where the real damage to confidence happened.
And as this quote from the source material highlights, the shift wasn't driven by clients actually backing out. It was a forward-looking reaction. Agents saw the writing on the wall, rising rates, economic uncertainty, and they started bracing for a potential slowdown way before it even really hit their books.
Of course, this isn't just a real estate story. An event this big sends out ripples that are going to touch nearly every part of the economy.
You can almost see it as a domino effect. The first domino to fall is the immediate stuff. Higher prices at the gas pump and for mortgages. The next one, a few months from now, could be fertilizer shortages that threaten our crops. And that last domino? Well, that's the long-term impact. Higher food prices and some serious risks to our supply chains.
So, where does this leave the market? Let's sum up the current mindset of the professionals trying to navigate this new reality.
Right now, agents are definitely reassessing their business revenue for the year. They're cautious, absolutely, but they aren't calling it a disaster, at least not yet. Their attitude is very much wait and see, and it all depends on how long the conflict lasts and how the whole global situation evolves.
And that leaves us with the final critical question. The industry is holding its breath, seeing this as a moment for caution, not catastrophe. But in a market that's so sensitive to global events, with so many variables in play, you have to wonder, how long can that cautious sentiment hold before it tips one way or the other?